Good afternoon. My name is Chris Landrigan with the Small Business Roundtable, the largest coalition of small business advocates in the country. Welcome to today's event, COVID and Taxes, What Entrepreneurs Need to Know. I would also like to thank H&R Block for partnering with us today to provide this timely information as we approach the height of tax season. Today's event will be recorded, and a recording of this event will be featured on our website at smallbusinessroundtable.org. If you would like to ask questions during today's panel discussion, please send them to us using the Q&A function located at the top of your screen. The questions will be addressed during the question and answer portion of the event. I'll only add that our guests from H&R Block are unable to give specific tax advice here. However, they will be able to address general questions. We have some great speakers lined up today, so let's just jump right in. To get us rolling today, I'm honored to introduce the President and CEO of the Small Business and Entrepreneurship Council, as well as the Chair of Small Business Roundtable, Karen Kerrigan. Under Karen's leadership, SBE Council has been protecting small businesses and promoting entrepreneurship for more than 25 years. Her advocacy and training work has helped foster U.S. entrepreneurship and small business growth around the globe. Karen, welcome. The floor is yours.
Oh, great. Thank you, Chris. It's an honor to be here, a pleasure. Always enjoy our work with the Small Business Roundtable, engaging with the Small Business Roundtable and on the critical issues impacting small business owners and entrepreneurs, and especially on this important webinar that we have scheduled today. First, real quickly, the Small Business Roundtable is a coalition of leading small business and entrepreneurship organizations dedicated to advancing policy, securing access, and promoting inclusion to benefit the businesses at the heart of the American economy, and that is, of course, small businesses. Members of the roundtable are organizations committed to improving the entrepreneurial ecosystem and represent broad diversity of small businesses across the U.S. through groups such as the U.S. Black Chambers, NABO, WIP, the National Association for the Self-Employed, Next Gen Chamber, the Hispanic Chamber, the National Small Business Association, the Asian Pacific Islander American Chamber of Commerce and Entrepreneurship, and Disability In. We share thought leadership, policy intelligence, and advocate on issues of common concern and interest. And certainly tax policy, the topic of today's webinar, is an area where most of our groups have engaged in terms of steps that can be taken to improve the tax system for entrepreneurs and small businesses in general, as well as how it can be utilized to help small businesses survive and better navigate the pandemic. And in that regard, the Small Business Roundtable, we are very grateful that our friends from H&R Block could join us for this important event today, as there were very useful tax credits, changes, extensions, and other relief programs that Congress and the administration put into place last year through various COVID-related packages, many of which have been extended into this year or modified somewhat, as well as new programs made law in 2021, that we want to make sure that every small business owner, every self-employed entrepreneur knows about. And many of these positive measures can be utilized by both small business owners with employees as well as self-employed entrepreneurs. So at the Small Business Roundtable, we understand that these many changes put into place by Congress and the administration can be quite overwhelming for the business owner or self-employed entrepreneur who do not have access to the technical support or expertise on what are sometimes very complex matters. And again, that is why we are so grateful that H&R Block has joined in partnership with us today to provide this very critical information and expertise. So I'm looking forward to the webinar and hearing from our friends at H&R Block. And with that, Chris, I'll turn it back to you.
Thank you, Karen. Your leadership and policy knowledge are deeply appreciated and indispensable. Next, I am happy to introduce Erin Donner, the Director of Government Relations, Public Affairs, and Policy at H&R Block. In this role, Erin leads the company's thought leadership and third-party engagement. She previously worked at the U.S. Department of the Treasury as Deputy Assistant Secretary for Public Affairs after nearly a decade of communications experience on Capitol Hill. Erin, thank you so much for being here.
Well, thank you. We're so excited to be here, and thank you to you and Karen for that nice introduction and kind of framing of the presentation today. Before Kevin gives the more detailed presentation, I just want to take a few moments to speak a little bit about H&R Block and who we are and what we offer to the small business community. Most people think about H&R Block as a tax company, and we are. Each year we help approximately 20 million Americans and about 2.5 small businesses across the country with their taxes. But in addition to our tax services, we also offer bookkeeping and payroll services year-round. And our small business offerings is an area where we as a company are looking to grow in the future. And so today, as Karen said, we're going to talk about some of the information and guidance that businesses need to know for tax season. We're going to go over some of the programs that Congress passed to help small businesses during this particularly difficult time. But for us, it's an opportunity to kind of introduce ourselves a bit to the small business community and kind of explain how we're here to help entrepreneurs with their financials so that business owners can do what they've got in business to do, which is to run your business. So before we get into Kevin's presentation, I want to share some results of a recent survey that we did of our small business clients to help us understand their needs kind of during this unprecedented time. So what we heard was that nearly half of small businesses say that typically they almost exclusively run their businesses based on intuition rather than data, and just kind of trusting their gut. But in the last year or so, due to the pandemic, most of our small business clients said that they had seen a negative impact on their businesses due to COVID, including a decrease in revenue. However, most of them also said they had not sought any kind of financial or tax advice from an expert to help them understand what programs were available to them, what tax changes had happened, to help them kind of navigate these waters. Unsurprisingly, entrepreneurs told us they're experiencing more anxiety, like many of us, I think. But despite this, only 1 in 5 said that they were thinking of seeing any kind of mental health professional to help deal with the stress of the COVID pandemic. And finally, we heard that nearly half of our small business clients were not feeling optimistic about their business success in the coming year and they were anticipating lower revenue. And this was particularly pronounced among minority businesses and Black businesses in particular. So clearly small businesses are, facing a challenge, and we really want to help. And so in addition to the client offerings that, we just talked about, the kind of educational services that we provide, like the webinar that we're doing today, we have made a commitment to help 500,000 small businesses over the next 5 years by working with local partners to help, educate and support small businesses as they recover and grow. And as part of this commitment, we are targeting that at least 15% of those businesses will be minority owned to help bolster diversity and inclusion in our communities. So that's a little bit of an overview about the company's work and goals on behalf of small businesses. And so now I'll introduce my colleague, Kevin Martin, who's going to take a more in-depth look at what entrepreneurs specifically need to know for this tax season.
Thank you, Erin. I am going to go ahead and share my screen, so bear with me for just a second. All right. So as Erin discussed, I'm going to get into some of the more nuts and bolts of the different tax programs that exist since the start of the coronavirus pandemic and some of the broader things in terms of what you need to know about them. Going forward, what we're going to cover is prior COVID legislation and tax benefits for businesses. This includes the Paycheck Protection Program, the Employee Retention Credit, the credit for paid sick and family leave, and several others that are of note. So obviously it will cover pieces of legislation that have existed for, at this point, a long time, things like the CARES Act that you might have heard about, and other pieces of legislation that happened during the last administration. But we're also going to include information from the recently passed American Rescue Plan Act here, so that you've got your bases covered in terms of as much information as we can give you at this point, because this is sort of a ever-changing area of interest. These programs started out as one thing, and they continue to evolve, and they continue to become other things. And as we go through, we'll see some of the in the weeds type examples of how that's applied, and how the learnings from earlier versions of credits and loan programs and things like that have influenced legislation going forward. We're going to talk about other tax items of note, and then really importantly, IRS, Department of Labor and Small Business Administration guidance that really drives a lot of our understanding about these laws and their implementation. Then briefly, I also want to talk about independent state relief programs that are worth being cognizant of, because just as important potentially as these federal tax benefit programs are your ability to apply for any state programs that you might be eligible for as a small business. And then last thing I want to discuss is the potential tax issues associated with running a business from home, and the sort of move to remote work, and that's how that's affected the tax outlook. So what are these new laws? Now, this is not a comprehensive list of all coronavirus-related laws that have passed in the last year. That would be a much longer list, but for our purposes, these are the 5 most important pieces of tax legislation that have come out that include some type of coronavirus-related relief. Beginning with the Families First Coronavirus Response Act, passed last March, very soon after the pandemic first got declared a pandemic. The CARES Act soon after that, and I swear at the beginning of this presentation I remembered what CARES stood for, but it's an acronym, but I can't remember it now, so I apologize for that. The Paycheck Protection Program Flexibility Act, the PPPFA, came out, and it's a really good example of how future legislation was built upon our learnings from prior legislation. The Consolidated Appropriations Act, passed at the end of last year, included a lot of very important updates and extensions for the various programs enacted under CARES, and then created some new provisions of its own. And then most recently, the American Rescue Plan Act from earlier this month. What you'll notice about these laws as we go through and discuss them more is they include a variety of broad and directed relief for individuals and businesses. You think about broad relief, that would be something like the economic impact payment, which goes to, every individual who makes under a certain amount. That's very broad relief. Whereas a lot of the business type provisions we'll be talking about are more directed. They're directed towards certain businesses with employees, businesses that have been operating for a certain period of time, businesses that have been directly affected by the coronavirus to a greater extent than others potentially. So that's an example of directed relief. And for the purposes of this presentation, we're really going to focus on the small business related relief, because that's one part of these much larger pieces of legislation, but it's a very important part. And as we'll see going through, there's been a lot of money allocated to provide benefit to small businesses specifically. So moving on, the key provisions of these laws. So what tax programs or tax benefits are contained within these? And these are some of the ones I really want to talk about. The Paycheck Protection Program, which you're probably familiar with, and if you're not, it'll certainly be discussed plenty here. The Employee Retention Credit, or the ERC, and working in tax, you'll notice acronyms continue to pile one atop the other. So forgive me as I go through and I use these acronyms, but hopefully you're able to follow along and understand what they mean and what program they relate to. The credit for paid sick and family leave came out of the FFCRA. economic injury disaster loans or EIDLs, which are actually an already existing loan program that the SBA maintained that were expanded and targeted under various provisions of the law, various parts of the laws that we just discussed. The payroll tax deferral, net operating loss changes, targeted relief. So I was talking about like particular types of businesses that were hit hardest. Think about restaurants and venues, especially in the most recent piece of legislation. We'll see a lot of provisions targeted towards those types of businesses, and also not only targeted towards specific types of businesses, but targeted towards specific types of owners. So you'll see provisions, for example, made in more recent laws directed towards minority and women-owned businesses that direct a certain amount of funds be used for those, but to really try to learn lessons from earlier iterations of these programs to make sure that the money is going to the people who need it the most. And then lastly, funding for states, which is a big piece of, it was certainly a big piece of ARPA, but it also was in the CARES Act and other previous pieces of legislation where not only is the federal government overseeing these programs, but they're providing money to the states that the states can then use to set up their own programs, whether that's a program that mirrors the federal version or something all their own. So moving forward, we're going to talk about the Paycheck Protection Program. This is a program that provides billions in relief to small businesses, including self-employed. I think there's a lot of misunderstanding in terms of self-employed persons potentially not thinking that they're eligible to receive these benefits, but they are. There's billions in relief to small businesses. The first round of funding came from the CARES Act, and then there were additional funds added by the PPPFA. The PPPFA also created some additional rules around the PPP. And then a second round of funding was enacted in the CAA, and there were slight differences in terms of the eligible businesses that could receive these loans. For example, in the first round, it was up to 500 employees. If your business had up to 500 employees, it would be eligible. In the second round, it was lowered to 300 employees, and the loan amount was slightly different. So the top loan amount under the first round was 10 million. Under the second round, it's 2 million. It's administered by the Small Business Administration, and they have a plethora of resources available on their website that discuss this. And I'll get into some examples of their guidance when I get to that section. But that is the primary housing area for the information around these programs, because the law created the rules, but it's really up to the administrative agencies to carry out the rules. And that's where you find most of the guidance on it. And that's what practitioners rely on in terms of giving advice and making sure that their clients are in the best position to take advantage of whatever parts of these new laws that they can. The loan amount is calculated based on payroll. So basically, you would look at a certain set period from usually from 2019. So your business was operating in 2019 before the pandemic occurred. You would look at your payroll for a certain period, it was 8 weeks, but then it evolved to 24 weeks period during that time. And then you would calculate a loan amount based on that prior payroll. And then you would use that payroll to then cover your payroll expenses for the pandemic during a period in which you were not getting as much funds. So basically, it's a loan calculated based on the payroll that you get, the payroll that you had while your business was operating at full steam. And even though it's designed for businesses that were in existence, if your business started in early 2020, it's possible that you could take advantage of this as well. So important to check in and make sure that if you're eligible, that you can take advantage of it. Over time, the application process has evolved because, as you can tell, this is a lot of information. The overall goal of this is to make businesses feel like they have access to this information, access to funds that will help them succeed. And one example of this is in the CAA, they simplified the loan application process for the second round of loans if you were making if you're requesting 150,000 or less. So in the first round, you would imagine you would have to give so the loans are administered by lenders. So you think of banks, credit unions, places like that, and you would apply through them, and you would have to provide the lender with all of this information to make sure that you're eligible for the loan. Well, the CAA created the simplified process where really all that you would need was a letter attesting to certain aspects of your business in terms of the amount of payroll you had, your need for the funds. And once you made that attestation, then you would be eligible to receive the loan proceeds. Safe harbor for the good faith attestation for SE filers who use gross income, that safe harbor does not exist. So something important to be aware of. If you're applying for a PPP as a self-employed person, the ARPA extended PPP eligibility to certain nonprofits as well. So it was originally available only to for-profit businesses, but nonprofits now can take advantage of the second round of PPP. Now, this is something that's sort of hot as of press time, but the second round of PPP is not exhausted, not nearly, because you heard a lot of information in the first round where the loan funds were gone within 2 weeks, and that's true. There was such interest in the PPP originally in the first round after the CARES Act that those funds exhausted pretty quickly, which was what necessitated the PPP-FA being passed last June, because that added more funds to that first round. Well, the second round has not been exhausted. It's less than 60% in terms of the amount of funds that have been used from that program. But the deadline, it's scheduled to end, the second round is scheduled to end March 31st. So if you're keeping count, that's Wednesday. The House has already voted to extend it 2 months to the end of May. The Senate has not yet voted on that, and that's something that H&R Block is certainly monitoring closely to see whether the Senate votes to extend it as well, in which case that window will be open to apply for these loans for 2 months longer. As it is, that window to apply for the PPP for the second round of PPP is closing is closing very rapidly. and I'll talk a little bit about why this is important. So there have been over 5 million businesses that have applied for PPP loans, and that's obviously a large chunk of the American business population. But there are over 30 million registered small businesses in the United States, and even if you assume that some of those businesses are not operating or are have ceased operation, that's still likely a good number of businesses that qualify to receive benefits under the PPP but don't. And the terms of who qualifies for PPP loans is very broad. And so I would encourage you, if you haven't done so already, to really check out and make sure with an established lender. And if you go to the Small Business Administration's website, they have information on which lenders can give you PPP loans and who you can apply through. But it's really important to take advantage of this if you can. And one other reason for that is it's potentially can be forgiven, which would essentially transform your loan into a tax-free grant. So typically, loans are not taxable, but of course, with a loan, you have to pay it back. If the loan is forgiven, then if you meet these certain requirements, the bank is not going to require you to pay back the loan, and neither is the federal government. So, and I'll say that in most cases, if you get a loan forgiven, that loan forgiveness is income to you. So when you filed your tax return, you'd get a form reporting the forgiveness, and you'd have to report it on your tax return. But one of the great things about the PPP is that under the statute, under the CARES Act, it's not income. It's excluded from your income. And so when you file your federal return, you don't have to include that in income. And under the old version of the law, under the CARES Act, and up until fairly late last year, this sounded great, but ultimately the benefit wasn't that great because if you had expenses that you used to cover these, and obviously the loan would be used to cover things like payroll, which you would normally deduct from your return anyway. So the old law said if you covered a cost with the forgiven loan, like payroll or rent for your building or something like that, then it wouldn't be deductible on your tax return. So essentially, it was removing the tax benefit of the forgiveness by putting you in the same position that you would have been otherwise. But they changed that rule, and now you essentially get to what we would call double dip, because you get the tax-free grant of the proceeds, but also the payroll costs and any other costs you use to cover the to cover with PPP funds. Those you can deduct on your return when you file. So that provided a huge boon for businesses, large or small. And so that's something important to think about when considering whether you want to take this loan or not as well. And I'll point out that there's been over $500 billion, $521 billion in loans given out under the PPP, and 200 billion of those have been forgiven. So roughly 40% of the overall loans have been forgiven, and the remainder, only a little less than 1 billion has been denied, and the rest are outstanding or in review. So there's a very good chance if you get a loan and you use that use those loan proceeds to cover your payroll and rent and other certain specific expenses of your business, then you'll be able to deduct them later on, and you will also be able to take to turn it into a tax-free grant. So it essentially becomes free money to you at that point. The employee retention credit, going through the questions, I saw that people submitted before the presentation. A lot of you have questions about the employee retention credit. And there's good reason for that, because this provision has changed substantially since it first came out in the CARES Act. Originally, it was only supposed to be for 2020, but it was extended to 2021. And it's a refundable credit for up to 70% of employee wages up to $10,000 per quarter. So you think about that, that's a $7,000 credit, up to a $7,000 credit per quarter. It's calculated based on business decline year over year. So if you either had to shut down your business because of a state order or city order or something like that, or you had gross receipts decline 50% or more, so your business went down by 50% or more, then you are eligible to claim this credit. Under the old version, you couldn't claim the PPP and the ERC, but as we've seen with other things, our understanding of the law changed, and the willingness of Congress to sort of expand these benefits and make sure that the money was being used to the extent possible made them say, well, now you can claim both, but you just can't use the same wages for both the PPP and the ERC. So if you have used wages that designated as payroll for the purposes of meeting the PPP requirements, you can't use those same wages to claim the ERC. But if you have other wages that weren't used in your PPP forgiveness calculation, then you can use those wages to claim the employee retention credit. And you request the credit on Form 7200. And so you would request the advance credit on 7200. And then when you filed your quarterly employee taxes return, the Form 941, you would report whatever advance credit you got during the year on that form. And really, its function as an advance credit is very useful for a business to sort of supplement funds as we go through the year. And, this was, like I said, this was a provision that was only supposed to exist for 2020, but through its expansion, it really is something that could stick with us through this year. And who knows, future legislation could come and it could stick with us even further. There's also a second version of the ERC that's available for non-COVID disasters. So natural disasters, things like that. Potentially, a business could claim two different versions of the ERC when they filed their tax return, either as an advance or when they filed their tax return. The payroll tax deferral, I don't want to spend a lot of time talking about, but something to be aware of: if you claim the payroll tax deferral for 2020 and you didn't pay your Social Security share of payroll taxes for that period. Make sure to remember to account for the money that you're going to have to pay back in 2021 and 2022 when you go forward. Because that's something that's very easy to forget about when you're doing the books for your business, and something to be aware of. The payroll tax deferral does not exist for 2021, so there's not a current year payroll tax deferral, but this is just something to think about if you've already taken it in the past. All right, the credit for paid sick and family leave. Additional paid leave requirements for employees of small and mid-sized businesses. This requires eligible businesses to provide paid leave to employees due to sickness and childcare costs related to the virus. And certain businesses may qualify for an exemption from this mandate, but the goal is to get businesses that wouldn't typically offer these types of credits to get them to offer them. And then those businesses will then get a refundable credit to reimburse them for the cost of providing the paid sick and family leave. So this really creates a carrot and a stick approach. The carrot is the refundable credit that the business gets for setting up the program. The stick is the mandate to require the credit. Interestingly enough, the CAA passed at the end of 2020. It extended the credit. So for credits for quarters one and 2, and then later 3 added by ARPA, for the first 3 quarters of 2021, businesses can get a credit for offering this leave. But the mandate to have the payment and the penalties associated with businesses that don't offer these programs don't exist anymore. So interesting change from 2020 to 2021, but an important benefit to think about for your employees, or if you're self-employed, for yourself, if a situation arises where you have to take leave. And the leave, I should say, is capped at different amounts depending on who has COVID, essentially. Because if it's the employee who has to be out of the office because they are sick, then the payment amount is $511 per day, up to a maximum of 2 weeks or 5-day a weeks. So $5,110 is the cap for an individual, and then $200 a day if caring for a family member. So the cap on that would be $200, $2,000 overall for the 2-week period. And so one other thing to keep in mind, if you have employees and you pay them credits under the terms of this program, that has to be reported to them either on the W-2 in like the other information box, or they need to get a separate statement reporting the amount of paid leave they got under this program. And the reason they have to get that is it's important if they're self-employed for calculating the credit that they could qualify for. But it just adds one other layer of complication to this. May not affect a lot of people, but it's worth noting in terms of that W-2 employee reporting requirement. Other federal tax changes, NOLs allow more for refunds for prior years. The retail glitch for qualified improvement property, this was changed in the CARES Act, so it's a depreciation error that was made in the drafting of the Tax Cuts and Jobs Act back in 2017, and they fixed that during the CARES Act. Non-taxable targeted idles, so idles are also can be given as grants to certain businesses. This is normally a smaller loan, not as large as what you would see from the PPP, but these are non-taxable grants. And also, you don't have to reduce your PPP by the amount of idle you received. That was something that changed under the law from one version to another. Non-taxable restaurant revitalization grants, many program extensions, expanded employer dependent care benefits, full meal deductions. So this is a provision that's designed to both stir people to want to go to restaurants. It's eligible for takeout too. So if you get takeout related to your business, it's potentially eligible for a full meal deduction in tax year 2021 and 2022. And I want to briefly note the unemployment income exclusion passed in ARPA for 2020. And so this is retroactive to 2020. you can exclude up to $10,200 of unemployment income from your compensation. So particularly if you were self-employed and you took unemployment compensation during the year, something to think about when you file your taxes is that this was an added benefit created by ARPA to allow you to exclude this amount from your income and essentially make it tax-free. Deadline updates. There are tons of deadline updates. For now, this year, the deadline is going to be May 17th. Whether that gets further extended or not, it's hard to say. But that's the deadline for individual income tax filing, and also if you're self-employed, for your self-employed tax return, that would be the deadline. And then guidance, as I said, is primarily issued through several notices and hundreds of FAQs for the IRS and FBA. And one example, the SBA has an FAQ just on the Paycheck Protection Program, and that FAQ has 66 different questions and answers in it. So it gives you an idea of the depth and the breadth of these different types of programs and the different types of relief we're seeing from these organizations. And one thing I would encourage you to do is, if you see an FAQ on one of their websites and it's just an HTML format, it's just on their website, save it, keep a copy of it, take a picture of it, take a screenshot of it, and save it in your file if you're relying on it for your business. Because one of the dangers with these informal FAQs and guidance is that there's always the danger that website could go dark one day. So unlike a court case or a law, it's not really subject to that sort of permanence. And so that's what I always tell people to do. Hey, if you see an FAQ that you like, or it's really favorable to your business, or if it's something you're relying on, just make sure you keep a good record of that. And check out your state. This gets us into towards the end of our presentation, but the CARES and ARPA in particular set up allocated billions and billions of dollars to states to set up to provide relief in whatever way they thought was going to be best. And so you see very, very many examples of states, especially after the first round of funding, setting up their own small business programs. And whether that was targeted to a certain geographic area or a certain type of business, it really varied from state to state. And so something important for you to check out and think about, especially if your business operates in multiple states, you could potentially qualify for various different types of benefits under these programs. And ARPA, like I said, includes specific additional funding for all states. And one other thing to note is that this is a lot of federal law change. I don't need to tell you, you sat through 25 minutes of me talking about it, but it's really important to note that states don't always conform to every federal change. And so for every time a federal law changes, in many states, that state has to come out with their own law saying that they agree with that change or they don't. That's what we call conformity. And so when you're filing your return, don't be surprised if deductions or payments or income that you didn't include on your federal return suddenly get added when you look at your state return. And that's an issue of conformity. Now, most states have done a pretty good job of trying to update their information and to make it as easy for the filer as possible, but that's not always going to be the case. And so when the more state filings you have, the more potentially complicated this can be. And so that's another reason why it's very important to look at for whatever benefits you may qualify under a state as well, because they're as various as the number of states we have. No two states have the same tax system as one another. So that's part of what makes our country great, I suppose, our different opinions on things. And so I don't want to talk about state taxation and working from home that much, other than just to consider what kind of changes you had during the year and how that affects your taxes going forward, and whether it's something you're going to change. Like, is it going to change the types of expenses you have? Is it going to change how you concentrate on working your business going forward? And one thing I want to shout out is H&R Block is really at the forefront of trying to understand these changes and work with you and and make sure that they tailor whatever program we use for your business specifically. And Block Advisors, which has many locations throughout the country, knows that as a small business owner, you don't really want to spend a lot of time going through numbers or crunching numbers. And so that's why we offer consultations to small business owners to help them get through all these different laws and all these different rules and really try to tailor whatever tax situation fits best for that business. And it's really something we care about, and it's really a focus of ours during this time. And so I would encourage you, if you have specific questions about your business, to seek out a Block Advisor's office, because they are the ones in the best position to give you tailored advice in that way. I can give you an overview, but they're the ones who can really get into the nuts and bolts of your business with you. So with that, I'll turn it back over, and if we have any questions, I'm happy to try my best to answer them.
Perfect. Thank you, Kevin, for that very detailed presentation, especially the conformity aspect, which I hadn't even thought about, but obviously it's something we have to deal with every year. Do you mind just unsharing your slides and we can get you more prominent in the screen? Kevin, can you hear me?
Yeah, I'm having technology issues, sorry.
Okay, no worries.
There.
Perfect. Awesome. So we already have a few questions in the Q&A. Feel free to ask more if you guys have any. I'll start with the first one. What are some of the big things about coronavirus relief for business that a lot of people may not know about?
Yeah, I think I touched on a little in my presentation, but there are a lot of small business owners, and particularly self-employed business owners. So you think about not necessarily someone who has a storefront or has operated a business for years and years, but someone who works in the gig economy. Someone who drives for a rideshare company, or who gets groceries for people, or goes out and gets food for them. They potentially, if they've been doing it for a period of time, can qualify for relief under these under one or more of the things that I've talked about. So really, the broad scope of the relief contained in these various packages is something that I don't think is fully understood, and I think it's borne out in the fact that we've got over 30 million small businesses registered, and only 5 million or so have actually applied for PPP loans. And I think really, hopefully that program, the deadline gets extended, and so we can have more people apply over the next several months. I would like to see that happen, I think, where businesses are able to take advantage of it. But really, it's something that I don't think is fully understood in terms of the scope of this and how many people can get benefits from it.
Absolutely, yeah, a lot of nuance there, and the call out on gig economy is obviously important. With, I think, more and more people are jumping into that just as something on the side, if not their full-time job. What are some of the questions you've been seeing from small business owners during this tax season?
A lot of the questions revolve around record keeping, in terms of what records they should keep for these various loan programs. Some of them involves timing. As you could see when I talked, a lot of these laws changed over time. One of the biggest examples was the deductibility of expenses under the PPP. And that was something that would, we had sent out guidance for months and months and months, from March probably until October, telling people that they couldn't deduct expenses that they had used that they'd had PPP cover. And then, of course, new legislation came out and that changed. So we had to really revise our tax pros' understanding of how that law worked, because these things evolved over time. And so areas like that where the law changed, or if you ever have a retroactive thing happen, like, for example, the big thing we're dealing with now, that unemployment income piece where 10,200 can be excluded in the 2020 return, that's generating a lot of client interest at this point, whether you're a small business owner or just a person who received unemployment compensation during 2020, it's certainly of interest to you.
Absolutely. Let's see. You did mention the employee tax credit. We had a question on that. I think it's related to family members that work for the business. They said our owner employees and their spouses' wages, eligible wages. They're really confused on this issue.
So if a related person, their wages will not qualify for the purposes of calculating the employee retention credit, but a related person does not include the spouse of the owner. So that includes lineal descendants and predecessors. So you think about grandparents, parents, children, things like that. Those are blood related family members are what they're talking about with those restrictions. But a spouse's wages would not fall under that restriction.
Gotcha. That's important to know. Another question, are PPP funds auto forgiven if it's under a certain amount?
Well, they're not automatically forgiven, but the level of record keeping that's required if you're under 150,000, like I said, is far less. Basically, you would just have to attest on a written agreement that you have used these funds for this purpose. And if you do that and the lender is satisfied, then at that point, they would be forgiven under the PPP, under the relaxed procedures put in place by the CAA.
Awesome. A little more specific from the same questioner about tax credits. Are there tax credits for hiring a formerly incarcerated person or an immigrant?
Not that I'm aware of in terms of hiring specifically for those groups. The main focus of the law is related to maintaining employees that you had previous to pandemic. And you see that in names of things like the employee retention credit. Obviously, the intention of that is for you to keep people on staff rather than have forced to lay them off or otherwise discontinue their association with your business. But in terms of specific incentives for immigrants and the incarcerated, I'm not aware of any.
It's good to know. Another one, are there important deadlines coming up that I know you mentioned a few, but are there important deadlines coming up that are important to small business owners?
Yeah, the one thing I want to point out, the deadline, the tax deadline was extended to May 17th. But if you owe estimated taxes, that deadline was not extended. So you should still plan on paying your quarterly estimated taxes by the normal April 15th deadline. So that's one thing I really want to mention there that's important that a lot of small business owners might overlook.
Right, like independent contractors, things like that.
Yes.
Awesome. Let's see. If someone got unemployment insurance last year and they've already filed their return and paid taxes on it, what should they do in that situation?
Well, this is an area where at this point they should not file an amended return, and that's the advice that exists out there from the IRS. But in terms of how that will be remedied going forward, that's an area that we're going to continue to monitor in terms of whether that's something that the IRS will just correct and then issue them payments for the amount that should have been excluded, or eventually at some point going forward, certain types of taxpayers will have to amend. That's sort of an open question right now. It's something that we're going to definitely monitor, and something that you should, keep in touch with H&R Block, because we're going to have the information as soon as it becomes available.
Awesome. If someone has already received their loan, what records should they keep so that they can file their taxes correctly?
Well, I would always recommend any documents you use to apply for the loan, maintaining those, and then payroll records, any expenses essentially that were covered with loan proceeds, having good records of those. It's not necessarily something you have to bring to the tax appointment for the tax board to be able to prepare your return, but should the IRS later come back and audit your return, or the Small Business Administration takes a closer look at the loan to make sure that all the requirements are met, either through your lender or through you personally, these are good records to have in terms of any expenses that were covered using those proceeds.
It's good to know. What are some of the tools business owners can use to access these benefits, or to figure out what benefits they can qualify to receive if they're not sure of that?
Well, H&R Block obviously will maintains their own clearinghouse of like information on these programs, but to really go straight to the horse's mouth, the Small Business Administration website has information on eligible lenders, has FAQs on all these different programs in terms of what information you have to include, has different application processes in place. There are literally dozens of different types of SBA loans, so it's very important for you to understand which loan you're applying for if you apply for one. But that's really a great location to get this information. And then if you have information about things like unemployment, the Department of Labor, whether it's the Federal Department of Labor or state departments of labor, have information on that. One thing that the SBA will have is the lender information, which will give you, get you to the right person to set up a loan if that's something that is of interest to you as a business.
Right. And you had mentioned that earlier in your presentation. So good to double down on that one. That's an important point. Due to you obviously mentioned the deadlines and how things kind of change, a lot with all the legislation. One of the attendees wants to know, due to all the ongoing changes, should they wait until last minute to file their business taxes? Or do you foresee anything changing between, when they need to file, or is it just going to be the individuals and sole proprietors?
Well, really, it depends on your personal situation in terms of whether it's beneficial for you to file now or to file later. The reason for that is, the benefits that you potentially qualify for. Maybe you are getting advance payments during the course of the year, but it turns out, at the end of the year, when you look back, you actually qualified for more credits than you claimed on each quarterly return. Well, in that situation, it's probably beneficial for you to file in order to get the full amount of the employee retention credit that you qualified for example. Or even, outside of the scope of this presentation, obviously the recovery rebate credit or the EIPs or the stimulus payments that individuals received, that's an important factor as well. And one beneficial thing about those payments is while it's possible that maybe during the year you got more than you would have qualified for otherwise based on your 2020 income. So let's say your income actually went up during 2020. The amount of recovery rebate credit you qualify for would go down, but you don't have to pay back the difference. That's one of the nice things about the RRC. You can only potentially get more. So if you're in a position where you got a RRC during the year that was less than you qualified for, then in that situation, you'd want to file and get that full amount of the credit you qualify for. But a lot of businesses, especially if they have more complicated tax situations, there may be benefits to them waiting to get all the information that they need in order to file. So, for example, if there are large outstanding questions about the treatment of forgiveness or something like that, like they've applied for forgiveness at the end of last year and they're still outstanding and waiting for a resolution of that, that might be a situation where they would hold out. Because if your loan's not forgiven, then it can have adverse tax consequences.
Right. You did mention earlier on the working from home piece, which obviously a lot of people have been doing during the pandemic. Someone mentions working from home, several younger folks move to their home states. Must they register and file in that state permanently, or can they still assign them as their HQ office?
It really depends on whether that move is permanent or whether it's only for a temporary period of time. So residency is established, and then it's not revoked until the person takes specific steps to change their residency. So that would involve things like getting rid of their house or apartment at the old location, getting a driver's license in the new location. There's all sorts of different tests that you can go through to establish your residency one place or the other. But generally, under most of the rules for withholding, the employers will continue to withhold based on the location of the employee on file on their W-4 when they give that information. So, for example, for me, I my H&R Block's headquarters is located in Kansas City, Missouri. I myself live in Kansas. And so when I filed this year, the withholding I received on my return reflected a full year worked in Missouri, when in fact, I was working remotely. As you can see, this is not my office in H&R Block's headquarters. I worked about 9 months of the year at home. So in reality, the withholding did not accurately reflect like the reality of where I was, but employers will continue to withhold based on the work location in a lot of instances, even if someone is working from home. So that's something to watch out for.
Definitely an important piece, especially with everyone working from home for the most part. Another question is there a training offered to small businesses by H&R Block? They said like for individual income taxes, or I guess differentiating between that.
Well, we do often do various tax talks with small businesses designed as the audiences. I myself have created 2 different ones, one focusing on the PPP and the ERC, and another one focusing on sort of employee benefits created by this pandemic. And those are 20 to 25-minute presentations that are often conducted through Block advisors' offices that we have. So it's not training per se. But it does provide information to people who watched in terms of how these programs work, and it really highlights the ways in which Block advisors can help. Because I think it's something that Aaron highlighted as well. You know, a lot of times it's important to make sure that you have the most you're getting the most benefits you qualify for to really get help when you need it. And as you've seen going through my presentation, there's so many new laws here. It's really worthwhile to think about, do I need someone to come in and, give me a hand and make sure that I'm getting everything I qualify for?
No, exactly. Yeah. From an expert who, you can look on the internet, but it's really hard to find a lot of that information sometimes.
Yes. I mean, even for me, I try to look for this stuff for a living, and it's housed in so many different places, and the rules can vary, especially for the state programs from state to state so much. It's something that you have to constantly monitor. And it's really, running a business full time is not something you want the responsibility to have to do.
Yeah, exactly. This will probably be our last question. This one's about EIDL versus PPP. Are there differences in what you can write off when using EIDL loan funds versus PPP loan grant funds? They say, for example, I plan to use EIDL for operations and PPP for owners' compensation and their sole profit.
Well, it's important for the forgiveness piece because, that plan doesn't sound too bad, because one of the stipulations of forgiveness under the PPP is a certain percentage of the funds to be forgiven has to be used for payroll. That threshold is 60%. So 60% of PPP funds have to be used to cover payroll in order for you to get the full forgiveness benefit. And so in a situation like that, there is some strategization that is important in terms of figuring out which expenses you want to cover using which loan proceeds. So there is some interaction there, but by and large, the types of qualified expenses are not going to be all that different between the 2 programs. And so a lot of times it's not going to be an issue in terms of what you're using it for.
Awesome. Good to know, Kevin. Any parting words?
I don't think so. Hopefully this has been helpful for people to get this information. And I see there are 42 Q&As in there, and I'm sorry we didn't have time to get to all of them, but hopefully I could help.
Absolutely. And we appreciated all those insightful responses, as well as the very informative presentation you gave. In closing, everyone, I would just like to thank Karen Kerrigan from Small Business and Entrepreneurship Council, as well as Aaron Donner and Kevin Martin from H&R Block for taking the time to be here with us for today's event. Once again, a recording of this event will be featured on Small Business Roundtable's website, which is on the screen now. You can also check out SBE Council and the Tax Institute H&R Block, and all the socials right there for you as well if you want to check them out and follow them. We want to thank you all for tuning in today, and have a great week.